Have you ever dreamt of flipping houses like a pro, but you hit a brick wall when it came to figuring out how you were going to fund it? Well, if so, you've likely come across the term hard money loan in your search. And if you're at the very beginning stage of real estate, that first major question is, well, what on earth is a hard money loan? Well, hey, get ready, because we are about to explore this financing option to cover all the basics without any of the buzz or the jargon. That way you know exactly what you can expect from this type of loan. But before we jump in, welcome back to the channel. And if you're new here, thank you so much for joining us here, and I hope our content helps you on your business journey. We post new content here every week covering all things business and finance to help you start or scale your entrepreneurial ventures. Now, if that interests you, be sure to subscribe to the channel so you can stay up to date with all the latest tips and tricks to grow your business. Now, whether you're a seasoned investor or just dipping your toes into the real estate market, understanding the ins and outs of hard money loans can be a game changer in your investment journey. So, grab your favorite snack, settle in, and let's explore what hard money loans are all about and how they can potentially transform your investment strategy. So what are hard money loans? Well, they are a type of secured loan that is used to buy hard assets, typically real estate. Now, hard money loans are considered a last resort or short-term bridge loans for investors. Instead of relying on the creditworthiness of a borrower, hard money lenders weigh the merits of the investment that a borrower is looking to fund and use that investment as collateral. Now, these types of loans come from investors, investing groups, and financing companies instead of traditional banks. Now, let's talk about some of the differences between hard money and traditional loans. Well, first off, it's fast funding. While closing on a mortgage can take 30 to 60 days, you can usually get a hard money loan in anywhere from a few days to maybe a couple weeks. They're short-term loans. Hard money loans often have very short repayment periods. They range from 6 months to maybe a couple years. In comparison, mortgages commonly have 15 to 30-year repayment terms. Now, they do have high interest rates. Interest rates on hard money loans can range from around 8% all the way to 15%, which is much higher than what most people pay on a mortgage. And interest-only payments. With a hard money loan, you might be able to initially make interest-only payments or defer hard money loan payments. And with a mortgage, you'll generally start repaying the principal and interest immediately. Hard money loans also have less of a focus on credit. They might check your credit initially, but they're really going to request proof of income and ask about your experience with real estate investing. They're generally most concerned with what the property's actual value is. In contrast, your credit score and debt-to-income ratio can be major factors in qualifying for a traditional mortgage. Hard money loans also require a large down payment. You'll need to make a payment of about 20 to 35% based on the property's current value or its after repair value. Now, in contrast, there are conventional mortgages that don't require a down payment at all or only require 3.5 to 5% down. There's also costs and fees. Mortgages and hard money loans both have closing costs of around 2 to 5%, although these costs cover different types of expenses. Both types of loans can also have penalties if you pay them off early, but hard money loans may have lower fees or shorter penalty periods. So the question is, how do hard money loans work? Well, while real estate is most commonly used as collateral for a hard money loan, other assets such as vehicles, equipment, machinery, and precious metals could also secure this type of loan. To offer a fast closing time, hard money lenders typically don't even bother looking into your credit history. They mainly base the loan on the value of the collateral itself. Now, keep in mind, you cannot borrow 100% of the asset's value. Typically, you can only borrow up to 60 or 75%, and the lender wants to leave you some room for profit in case you default. Now, hard money loans themselves have high APRs and loan terms of 1 to 5 years. They also have fees. They've got origination fees and upfront loan fees. Oftentimes, you're seeing 1 to 5% of the amount borrowed as the origination fee. You've got document preparation and underwriting or evaluation fees. There's literally a cost to prepare the loan and legal documents that will secure the lender's interest in the property. These documents are usually drawn up by a legal firm or attorney, and they can cost anywhere from $500 to $5,000 to get completed. There's also property insurance. As with any loan, the lender is going to want to make sure that there's sufficient insurance bound to the property to secure against fire, damages, injury, and this cost is going to be paid to the borrower's insurance agent or company of their choice and will vary based on the type of project, the usage of the property, location, and of course, property value. And there's also title and escrow fees. Almost all lenders require a third-party title and/or escrow company to manage and insure the transaction. Title insurance is different than the property insurance, as the title company is responsible for documenting all liens on the property as well as judgments against the borrower. The title insurance ensures that there are no other liens on the property other than what the lender allows after the transaction is completed. Now, this fee varies based on the actual loan amount, so we don't have a specific number for you. There's also prepayment penalties. One of the ways that hard money lenders reduce their origination fees is to include a prepayment penalty. Now, this means that you have to have the loan for a minimum set time or pay a minimum amount of interest even if you pay the loan off early. Now, not all lenders charge these, so be aware if your lender does. So with all that said, what are the pros and cons of hard money loans? Well, the pros start with accessibility for investors with poor credit. They're backed by collateral. There's obviously the speed of funding, of how quickly you can get a hold of it. Can usually get funded within a few days. There's typically flexible loan terms and a much less strict underwriting department. Now, the cons include obviously higher interest rates. Typically, you're going to have to deal with a large down payment, plus fees, plus closing costs. You've got the shorter repayment terms, and these are riskier than traditional funding. Not to mention the fact you're going to be stuck paying high interest rates to avoid the prepayment penalty. So what are some alternatives to hard money loans? Well, you've got your private money loans, something that you're borrowing from friends or family or others. Now, this does have its own set of disadvantages, which we've talked about in other videos. You could feel uncomfortable about doing this, or you could risk the relationship by borrowing that much money. You've also got business credit as an alternative, which is 0% interest business capital that you can use to invest in real estate. You just have to use the right third-party processing company. In fact, we actually created an entire masterclass on how to get up to $250,000 in 0% interest business credit to use for investing. So I've actually linked that below in the description, so check that out. And I believe that just about wraps our comprehensive guide to hard money loans. We hope that you found this video informative and valuable for your real estate investment journey. Now remember, while hard money loans can offer flexibility and opportunity, they also come with risks that require careful consideration. If you have any questions or want to share your experiences with hard money loans, feel free to drop them in the comments below. And while you're listening to me, don't forget to give this video a thumbs up if you liked it and subscribe to our channel for more insightful content. As always, I'm your host, Zach Ritchie. Thank you so much for joining us, and I will see you in the next video.